Hey, welcome back, DeFi Chads. This is Evangelist Wealth. Just a quick portfolio update. We haven't dropped a video in a couple of days. So just a quick update and then into a little around the current news and why our thesis is supported for ETH. We talked a lot about theory and stuff, but we haven't gotten into, currently what's going on to make us more confident in that thesis and strike while the iron is hot. Like, why is now the right time? So I'll go through a bunch of, what I think articles and other news that kind of supports what we think will happen with our investment. For the portfolio side of things, though, ETH is back up near its highs. We made around $930 since the last video, where we harvested about 500. So I'll go pay down this debt. We'll keep holding our leveraged ETH stack, and I expect us to go higher. So we'll see how much this turns into, but we'll exit, I think, in a bit. So on the flip side, I'll see you and we'll dive into our thesis and the news around it. All right, and then we just harvested and paid off our debt a little bit, and yeah, chugging along. All right, so let's get into our market updates for our Ethereum thesis market watch, and we'll start with restating our thesis for why Ethereum. It's the highest Lindy chain. Because of that, it has the biggest economy, since Lindy is the upper limit for capital on the chain, as we discussed in our model videos. And that's ideal for stablecoins, a use case that we talked about, and real-world assets. So tokenization of all the financial and other assets that exist in the world. And this will drive Ethereum as like a valuable ledger, right? And make our investment bigger because of driving value to ETH, the asset. So token terminal. So we'll look at some metrics around Ethereum, right? So stablecoin supply. You can see since like 2021 and like the start of DeFi, which is like, I would say like around 2019. It's just gone, hugely meteorically up. Took a break once crypto, was not so much in the limelight, and now is back on the uptrend. So we can see now is a good time, to see that the price of ETH goes up because of the value of its economy. And some other, active loans, we'll talk about this as well. In terms of DeFi, and borrowing on DeFi, that's a good way to kind of get a sense of how much activity is going on. You can see that we're shooting up even past the 2021 highs in terms of how much debt is being issued on chain, collateralized debt, through RWAs, stuff like our DeFi portfolio. Other people are doing the same thing, and it's around $35 billion, which is, I think, a novel number. Okay, so we saw how Ethereum is kind of dominating on the current metrics for assets on chain. There's also stuff in the news about how Europe is trying out stable coins. There's a couple of news articles in terms of Monerium introducing or testing a Euro stable coin, which is going to be on ETH. All Unity, which is launching another Euro coin, EURAU, which is like MiCA compliant, which is the European stablecoin legislation. So you can see that Europe is trying to get in on stable coins, right? It's trying to deploy euro-denominated stables into the permissionless economies like Ethereum that exist. And not just sovereigns, but as other asset issuers or financial engineers, I would say, like banks, they're tokenizing other assets like structured notes, right? And a lot of these are permissioned, and we'll talk about why I think this will become permissionless. There's other examples that have started out permissioned and then become permissionless, but we'll talk about that later. More just to point out that there's additional tokenized assets coming onto Ethereum. We're seeing a wave of people tokenizing on Ethereum, mostly Ethereum, but also other chains as well. Okay, so cool. There's a bunch of people tokenizing assets. Why will they choose Ethereum? And this comes back to, like it says, the biggest economy up here, right? Because it's the largest on-chain and permissionless economy, it will attract other people to deploy assets, because what do they want to do? They're like salesmen for their asset, right? Any bank like selling a structured note or some other kind of investment vehicle, they want buyers, they want capital to come in. And that's not the easiest thing, right? Like what are the sales channels for getting investors to invest money? And this is becoming one, like appealing to the capital that's on the Ethereum ledger. So how do you do that? You issue a token, an ERC20 or other kind of token on Ethereum, and kind of let it trade, let other people hold it as they wish, send it back and forth, and of course put into AMMs as liquidity, right, to let people swap back and forth between their assets and your asset. One example that I want to kind of point out is Societe Generale, and this is coming back to that, permissioned assets become permissionless. So this was another Euro stablecoin. This is back in 2023. A French bank, one of the largest banks in Europe, Societe Generale, launched a Euro stablecoin on Ethereum, and it started as a permissioned stablecoin, as in if your address wasn't on the whitelist, you couldn't really do anything with their token. But last year they removed the whitelist restrictions, as this tweet says, right? And this is just to point out that, okay, because of regulation back then and the more aggressive or hostile regulatory environment under the previous administration in 2024 in America, right? There was this kind of whitelisting and other restrictions on who can own these assets, and that's kind of antithetical to DeFi, right? Which is supposed to be, like we covered, permissionless. You don't have to ask anybody's permission, transparent and open, right? So these assets aren't exactly like that. And it may seem dumb to have those on the chain, but I think they move towards being more permissionless and freely accessible, because that's like the incentive, right? The incentive is to open it up to all of the liquidity on Ethereum, not just the addresses of institutions, right? Which probably you talk to in other channels as well. So that's one thing. And I think there's other, and I'll get to these others actually, in terms of Ondo and Reserve. So Ondo Finance is like a big company that is still doing permissioned. So I'll go down and I just want to highlight this. This is not available in the US, right? And this is the case for many real world assets and other companies that are tokenizing assets. They have to exclude Americans, or they did up until 2024, because of previous hostile SEC and US administration. And now this new one is a lot friendlier to crypto. So this not available for Americans or not available in the US will go away. And you can see here they're selling like Tesla or Visa. These are like US equities to global markets. So basically anybody on Ethereum that have like stables and stuff, they can buy assets that are kind of like reflecting equities, right? They're tracking equities, US equities that usually the world doesn't have access to. And so you can see that, okay, since most people don't have access to the American stock market, these types of solutions allow external or foreign capital that's like holding, let's say, USDC overseas, to be able to buy, US treasuries and get the return on those treasuries, or buy US equities, right? And kind of capture the price appreciation of those. So back to this, right? When we, because of this permissionless economy, there's a lot of like private actors that are, because of profit motives, are incentivized to issue assets. And because of the friendlier regulatory environment, they will start issuing, more permissionless and less restricted assets. And this is going to kind of blossom into more activity on Ethereum, more fees, more assets, and even more capital. And this is good for our investment thesis. Okay, and one other thing, this last bullet point, we will get into in other videos how Ethereum and Solana differ in their approach to scaling. But from one angle, Ethereum's scaling approach is to let other entities will create other chains that inherit Ethereum security and provide what Solana provides as a differentiator, which is a low-cost execution environment. So as there's more and more assets on Ethereum because of this, what we covered here, there's also this other incentive and market force for companies and banks to create what are called layer twos on Ethereum. And we'll get into what those layer twos are, but just think of them as these other external environments that inherit the security of Ethereum in a technical way that essentially uses math and the Turing completeness of the Solidity language and scripting language on Ethereum L1, but it results in just fast, cheap economic activity being able to happen for the assets that are issued on the base Ethereum layer. Okay, moving on. Sovereigns will issue their own stablecoins. So this is a big part of our thesis in that there will be a kind of prisoner's dilemma to issue your fiat currency on Ethereum or a public chain. And there's a lot of mid-curve Blockworks researchers who will disagree with this, and their kind of whole shtick is, Circle, Tether, or the Chinese government, they'll make their own ledgers for stuff like the digital yuan or their product like Tether. And they don't need Ethereum, right? There's no point to Lindy and the security provided by Ethereum. They'll just make their own ledgers, and everybody will be happy with that. But I think that misses the point of why USDC or the current stable coins exist at all. It's because of the economy on Ethereum. And it'll take time for these asset issuers to kind of learn that hey, it's the best thing to do is just issue on Ethereum and kind of just manage it through that contract, because that is where it's most useful. These stables are most useful because Ethereum has that economy, that permissionless economy on top, and users don't mind keeping their wealth or their value on Ethereum. Whereas China's yuan, digital yuan ledger, that's still owned by China unilaterally. They can kick you off anytime they want. So it's not as attractive a option for users that, users don't just hold stablecoins. They hold other assets plus stablecoins. And the interaction of those two things, swapping back and forth between those two, that's where the interesting things happen. And because these other chains are owned by the Chinese government or are private ledgers, there's not going to be that richness in terms of assets issued on those ledgers. So they can never really be a substitute good or a replacement solution for Ethereum. Ethereum is where the permissionless economy is happening. It doesn't matter if you make your own private chain. Anyways, there's news items like this example pointed out here of Europe and European lawmakers kind of scrambling to accelerate the euro stablecoin, which, and I'll bring this up here, which they will decide to run on public blockchains like Ethereum or Solana. So they're trying to make a decision, and they are doing this as a reaction to the Genius bill or the US stablecoin bill passing, and DeFi regulation passing, because we've kind of, the administration on the US side, they've said, okay, we should push stablecoins because US dollar stablecoins dominate the on-chain economy. this is clearly a good way to maintain dollar dominance, to have more users of the dollar overseas. People in China and other countries, even if their government doesn't want them to hold US dollars, they start saving in US dollars because of stablecoins on public permissionless networks like Ethereum. So the EU officials see this and they're like, oh, well, we want to be, the euro should be the dominant currency. That's good for us, just like the US enjoys reserve currency status and they can print willy-nilly, right? Europe wants the same power. So this becomes a prisoner's dilemma of, okay, if you want your currency to be used by this permissionless economy around the globe, of just people holding fiat around the globe, then you're going to have to issue on Ethereum, your fiat stablecoin. So this goes back to why, public chains will win out, is because of the incentives, right? The US dollar stablecoins like Tether and Circle's USDC, they are the dominant product being used, and sovereigns will want to dethrone that. They have their own geopolitical interests. So the US stablecoin push, and because we say it's for the dominance of the US dollar, there's going to be other people that see that push, and the implications of it, making that Eurodollar market more censorship resistant overseas in enemy states, right? That's good for us. It's like our reserve creep. Europe and other countries like China are going to see that same benefit and want to capture that same benefit by issuing a stable coin on Ethereum. So what happens naturally after this plays out? Because of competition, right? Because of these incentives between sovereigns, and now that you have fiat on chain, of course, you're going to want to issue assets so that people that hold that fiat can buy your asset, right? So everyone's going to tokenize their assets, sovereigns included, because it's going to all be on Ethereum, and a large TVL, or a large part of that capitalization, will be on Ethereum. ETH will be the liquidity pair token of choice. So first things first, right? What happens when multiple fiat stables are on the same ledger? You can have on-chain forex markets that are fairer and more transparent. So these will kick off. I think that this will be like a common use case for perps, and we already see stuff like G-Trade, even on aerodromes. If I go to aerodrome and I search EURC, you'll see between Circle's Euro and USD product, there's like $30 million of volume daily, paying 59% APR, and even more in some other cases, right? So this is clearly profitable. There's clearly demand and volume once these assets come together. And this is just on a single layer 2 base, right? On Ethereum. These tokens are deployed on Ethereum L1 and like become products on it. And then this economy emerges where, because of AMMs, you can swap between these two, just like a Forex market, right? So I think this will kick off. Other RWAs will be issued. I showed you Ondo Finance before, right? That's tokenized stocks and stuff. There's also the Reserve Protocol, where users can mint any kind of external token. They can make baskets of stuff, right? In terms of like index funds, essentially. And this is funny names, like Imagine the Smell, or Real World Asset Index. So if I go like here, right, it'll tell you what assets are in here. And anybody on the globe, they can read about this, they can see what assets are, they can verify that the assets held, and buy into this, or mint their own assets, right, like fiat or any other kind of anything that has a price feed that's available. We'll talk about oracles later and how they like kind of enrich what on-chain economies can do, but suffice to say that because of this competition, there's going to be a rich ecosystem of assets. because those assets will be on ETH will be an important trading pair. So actually, that's why I opened up Aerodrome. I'd like you to notice one thing. I searched for EUROC, so you can see WETH, which is basically ETH, and EUROC pool has high volume, right? There's a lot of demand for swapping between these two, and you can see that if I go to, I'll just put in WETH, right? Against many assets, right? It is the common pairing for liquidity. When a bunch of sovereigns issue their fiat stablecoins, in order to provide liquidity for it, they will likely do this, which is pair it against ETH for liquidity. This is because then it can be swapped with any other stablecoin that has ETH liquidity, right? So like, if I had like USDT and then there was an ETH USDT pool, and I think there is even on Era right here, I can then go from USDT to USDC without there being a direct USDC or to USDT pool. So you can see it's kind of like the connector asset to everything. And that's another bullish thing for us because, this competition between all these asset issuers, if you want to deploy liquidity for your asset, you're going to need to buy ETH, right? And again, this will grow the value of ETH and it's good for our investment thesis. And finally, the last thing, which is there's whenever you have other smart, greedy people recognize your thesis and act on it as well, that's always a bullish signal, right? There's other smart, greedy people who've thought the same thing and are making similar moves, obviously. So just in terms of news, right, like there's this tweet. Peter Thiel is, like the PayPal mafia guy. He's piling into Ethereum, right? He's gotten a big stake of these Ethereum treasury companies like Bitmine and Zilla. They're essentially just like Wall Street vehicles to leverage available debt liquidity on the market and use it to buy a treasury asset and make that treasury asset go up in price. So, Michael Saylor does this with Bitcoin, but I actually think it's much more useful and much more viable as an Ethereum thing, right? So like many Michael Saylors doing the Ethereum thing, well, Peter Thiel is funding those folks by buying large stakes in their treasury companies. And you can see this Wall Street Journal article on Peter Thiel kind of leading investors into Ethereum. And this is just, again, a kind of clue that there's other people that see the same thing that we see coming, see Ethereum as like the obvious bet of, or like the winner of that kind of secular world change happening in tokenizing of all assets. And, we're at the right place at the right time. Yeah, it's time to buy ETH. Anyways, hope you guys enjoyed that. Hope that was enlightening and makes you stronger believers in our thesis and stronger holders as a result. Diamond hand it, folks. Anyways, I'll catch you guys later. We'll have more updates as ETH, goes to the moon. All right. See you guys.